Very good afternoon, everyone. Welcome to today's uLaw webinar. Webinar topic for today is going to be on trust and general reconciliation demystified. Now, today's webinar has been accredited for 1 hour of professionalism CPD credits. I once again repeat that today's webinar is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Okay, so I kindly request you to mute your phone lines, use the chat window to ask us any questions during the session, and we're going to take the first 40 minutes to kind of go through presentations to set the context for what the trust and gender reconciliation steps entail, the importance of this periodic process that is expected out of you as a legal professional from the Law Society, and how easy it is to generate these reports and what you should understand and expect out of generating these reports. Okay? And we'll take the last 5 to 10 minutes just to walk you through using the example of such a product such as uLaw to walk you through what the reconciliation process means, how easy it is today with the legal accounting, and the automation of a lot of these systems that helps you make faster decisions, faster reporting, and the ability for you to be compliant and audit ready right from day one. Like every other uLaw webinar, today's webinar has a specific agenda. We're going to be talking about the reconciliation process, especially covering the trust and the general reconciliation one after the other. We're going to really look at the different components or data points or data elements that are required to be captured across both of these reconciliation reports. Where do these data elements arise from? How are you entering those data elements to begin with? And how easy it is for you to generate these reports on a monthly basis is really the context of today's webinar. Now, the reconciliation process also enables you to generate all of the other Law Society reports and documents that are expected beyond the reconciliation process and documents themselves. So, for example, on a monthly basis, the Law Society does expect that you generate the client's trust and general ledgers and journals. And you would recognize that as soon as you've done your reconciliation process, generating these ledgers and journals are just a mere generation of reports, because the data elements are complete, they're fixed. By reconciling, you've certainly understood the balances between what you've captured in your system or your system of record or your bookkeeping system or software, however you like to call it, and comparing that with the actual data elements that are captured by your bank. Okay, so comparing these two, understanding if there is a difference between these two systems, and being able to provide a justification as to why such a difference exists is truly what that reconciliation process is. But if you look at the trust reconciliation, because trust as a vehicle is involved, the Law Society, of course, requires you to do further detail in terms of the total trust client listing across all of your clients. You know, how much of trust balance exists across all of your clients that pretty much adds up to be your trust balance. Okay? And how can you be prepared for that audit? What kind of a checklist can you have? That's the idea and the agenda. I hope you're able to hear me. If you aren't, I kindly request that you dial in using the phone numbers provided. Because sometimes the computer audio may not really help us here. So I'm just going to type in the phone numbers one more time. Thank you very much. Okay, so I will continue to be a bit more loud, and hopefully you can hear me better. So we're going to talk about how to be prepared for an audit, the checklist and the walkthrough of that checklist, and how maintaining such a checklist on a periodic basis allows you to be more proactive in how you can manage your audit readiness. Okay? And of course, as I mentioned, we'll spend the last 5 to 10 minutes maybe to enter a few data elements, understand how that flows into the reconciliation data capturing aspects, and then finally generate the reconciliation reports, just for you to have a better appreciation of the entire flow. Okay? Now, starting with the trust reconciliation process, what does it take to do this? How often do you do this? And what is the expectation from the law society from you as a legal professional across all jurisdictions in Canada to provide and present? Now, the Law Society requires you at least on a monthly basis to generate the reconciliation document, and they recommend the 25th to the 28th, give or take, way before, a few days prior to the end of the month, if you will, to be able to generate this report. So, on an average, you're generating at least 2 reconciliation documents in a month, one for the trust and one for the general. Now, of course, if your law firm does not deal with the trust accounting, then of course you don't have to deal with the trust reconciliation process. But if you do have a trust but you still not had any transactions, it does not hurt to what's called as a zero trust reconcile, just generating a trust reconciliation report. Even if there are no data elements captured, it would still show 0. That way you're being very specifically stating that in the month of, let's say, February, you've had no transactions in or out in that trust account, okay? But from that trust reconciliation process, there are 4 important aspects that the Law Society is looking to capture to really understand an audit trail of how money has flown into the trust account and for whom has the money flown in and out of that trust account, okay? So first and foremost, they talk about the recording of the bank statement and the balances. So when you reconcile, one of the first steps that you do is you look at your bookkeeping system or your bookkeeping software. It could be manual, automated, whatever it may be, a process or a document or a system where you write down these transactions as and when they occur, right? So you take the bookkeeping system and then you take the bank. So I'll give you a good example. If, let's say, today a client approached the legal office and presented the legal firm or the law firm $1,000 of a retainer, right? Right away, your bookkeeping system, somebody in the firm is actually going to enter it. If it's a solo practitioner business, you're going to do this yourself. You're basically going to enter it into the system that you've just got this retainer from this client. You're going to enter his name, the matter details, or her name, matter details, and tell the bookkeeping system that this $1,000 retainer has been provided. Could be a check, could be a credit card process, whatever it may be. Now, of course, this payment could have been done also via cash because the Law Society does allow you to capture up to $7,500 of retainer in cash. Let's assume it's a check, and you have this in your hand. You've written this in the bookkeeping software. You've not yet deposited in the bank. So if I were to reconcile this right at this very moment, you're going to notice that the bookkeeping software has $1,000 in your overall books, if you will, of all the monies in and out. It's going to have $1,000 more than the bank because this $1,000 check has not yet been deposited. Okay? So those are your outstanding deposits. Now, you may have written checks to others. So you may have written checks to a client. You may have written check for disbursements right out of the trust account. Okay? And if those checks haven't cleared, right, what that really means is you have accounted that that money has actually left your book. So let's say you wrote a disbursement for $100. You will automatically, into your bookkeeping software, say that, hey, $100, I'm just writing this trust check for the disbursement, and it's actually from my books, it's $100 less. But if the other party has not yet deposited that $100 check into their account, it's not yet retrieved out of your bank account. And hence, your bookkeeping system would have $100 lesser than what there is in the bank unless that deposit or that check rather has been withdrawn. The amount has been withdrawn. So that's your outstanding checks. So on a monthly basis, these are, of course, the pragmatic situations that a law firm needs to go through to understand where the books are, where the monies are. And hence, the Law Society gives this as a guideline. This is, of course, a financial management reconciliation as a financial 101, but it's very important from a trust account because this is money that's paid to you in trust, and of course, auditors and the Law Society is very specific about no misappropriation with these trust funds, right? And that hence the reconciliation report clearly allows you to give enough explanation as to what happened with that trust account, starting with these anomalies of outstanding checks and outstanding deposits. Fundamentally, you start off with a starting point, so that is the specific date which you're using to reconcile. So let's say it's the 28th or the 25th of February, then you're going to actually utilize the bank balance as of the 25th, and you're going to compare your bookkeeping system, and I go back to whether it's a paper or software, a system where you're recording all of these transactions yourself as well on the 25th as well. So you're going to have a common ground, and you're going to compare what the bank balances are. So let's say on the 25th, let's take that same example. If on the 25th you receive that $1,000 retainer and you've not yet deposited, what you're going to see is the bank balance of your bank being $1,000 less than the bank balance in your books. And that's fine. What the reconciliation process is not for you to match exactly those balances, but to also provide the justification as to why they don't match. So now you're going to say, that was a $1,000 outstanding deposit that did not reflect the bank, and hence my book actually has $1,000 more. And by providing that, that adds $1,000 more to my bank and balances the two. Okay, so that's really the advantage of being able to talk through the balance and the outstanding checks and deposits. Okay. Now, another very common pragmatic situation that a law firm may be put through are bank errors. Now, of course, when you start off a bank account, especially for trust account, I'm sure you've mentioned to the bank that this is a trust account. Please do not withdraw any bank fees out of my trust account, right? Because they all have to be documented against client transactions. But sometimes it happens where the bank may withdraw, let's say, your bank fees of $20. Now, of course, that happens in real life in the bank. And unless you reconcile where you're going to open up your TD Bank or RBC, BMO, whoever you bank with, community banks today, let's say you have your bank statement, whether printed or if you go online. And if you look at that February 25th, you're going to notice that the books that you have has $20 more. And the reason for that is there was that $20 bank fee that was withdrawn out of the bank. Right? You never expected it, and it just happened right that afternoon on the 25th. And this is why they ask you, if you can, to capture and reconcile more often so that you can catch these types of issues and, in fact, correct them before you actually generate this report. So assuming that this happened on February 14th, and if you were actually reconciling on a more weekly basis, you would have captured this. You could have gone to the bank and then said, you know what, you're not supposed to do this. Please put that $20 back and take the $20 out of my general account, which then there would have been no instance of that $20 being taken out. So when you get to the 28th, that would not even be an issue, right? There are no bank errors. So catching these errors early, reconciling more often is important, and systems today such as uLaw facilitate that for you, right? You don't have to wait till the end of the month to reconcile. You wait till the end of the month to generate the reconciliation report, which can still be one report. You don't want to be generating 30 days worth of report on a daily basis, right? But you still want to ensure that you've matched the numbers that have happened every day. Okay, so those are the top three. Then we come to the step 2, right? We talked about outstanding checks, and we come to step 3 rather. Now, step 3 is really the client trust listing, and we spoke about this. This being a trust account has monies coming from your clients who are paying you through retainer or other means into paying into your trust account. So if, let's say it's a retainer. In this particular instance, you have Peter Piper who paid you or has actually an amount of $1,120 left in his balance. You have Susan who actually has $72 rather left. And a very important component, if you're generating this manually, something for you to keep in mind is to ensure you have the last activity date. So as of, in this case, August 31st, 2010, what was the balance for Peter Piper, and what was the last activity date? When did anything at all happen last in this account, right? So for example, you can see in the case of Terry, though we were reconciling in August, really not much has happened for a very long time, right? So this amounts to the total balance that's left in trust. So what is left in trust as a balance is really the $1,715.30. But what is the breakdown? Where did the number come from? Well, it came from 3 transactions or 3 outstanding balances for these 3 clients, one being $1,120, added plus with 72, and added with 523. Okay, it's very important that you have, and that becomes your total trust liability as of that particular date when you're reconciling. And as, of course, you're showing the comparison between the bank and your own bookkeeping system. Of course, once you have these top 3, will manage the last step kind of balances on its own. If it does not balance, of course, you need to figure out why it hasn't balanced. Maybe there was a retainer that you received, you put it at the bank, but you never mentioned it into your bookkeeping system, so you may want to go back, backdate that retainer, enter that client information, and enter that retainer, which would then allow you to balance it, right? So understanding the data elements that go behind this reconciliation process is very important. And once you appreciate the data elements, you would also appreciate the timeliness of capturing data and how that reflects and actually helps you in the reconciliation process when you do it. So if you're very disciplined, methodical of entering data about transactions that happen on a day-to-day basis within your system, then you're really preparing yourself to be very successful when time comes to do reconciliation. It's an analogy that I provide at institutions that I teach, where I talk about, often we as parents sometimes tell our children, if you can, please always study, even if it's a little bit on a daily basis, so that you're not left with studying all of the information you need the day before your examination. The closest analogy that I can come up with now that I'm in that phase of my life too. So reconciling on a daily basis helps to generate that final reconciliation report at the end of the month. Okay? And we'll have a look at this when we actually do a demo, and we'll take some examples from that. Okay, so that's the trust. Now we come to the general reconciliation. Of course, with the trust account, you've had client-related transactions. With the general, you may have both the combination of client-related transactions and your office-related transactions as well, especially if you're using your general account to, let's say, pay for office expenses, right? You may have a combination of both. So it's important that you capture, again, the data elements on a timely manner so that the reconciliation happens, makes it easier on you, rather. You're not catching up on too many anomalies, right? Instead of having one single data element to manage, if you haven't captured data on a regular period, then you're dealing with multiple data elements. But when you look at the reconciliation report itself, it's pretty similar to the trust reconciliation, with one difference, of course, is where you do not have the trust client listing. If you looked at the trust reconciliation report, and step 3 is the client trust listing, and you do not have that in the general account. But you still have recording of the bank statements and the balances. So as of this particular date, what was the balance in my general account? Again, what were the outstanding withdrawals? What were the outstanding deposits? Same concept that we spoke about earlier. Okay? And then comes any outstanding withdrawals and payments. What are those transactions? And what are those outstanding deposits and receipts and those transactions? Okay? And of course, you compare, very similar to your trust reconciliation, the bank and your bookkeeping system's ledger. So as of this particular date, the February 25th, what was the balance in my, as my bank told me it was, and what is the balance in my general account with regards to my bookkeeping system? The fundamentals, the capturing of data are all the same. It's just a different report because it's a different account, and the nature of this account is slightly different from that of a trust account. The one added responsibility that, of course, a law firm has when it comes to the general account, especially if you're dealing with paying for office expenses and other things from the general account, is to have a system where you can quickly enter that data as and when it happens. You may be paying for disbursements out of the general account. Makes it even more important that you recover those disbursements in time so that, if possible, you can manage these balances. And once these numbers match and balance, you're really setting yourself up for success because those numbers are now written in stone and hence generating a profit and loss statement for that month, generating your client trust ledgers and journals for that month. It's just a breeze because you've done the hard work of reconciling to begin with. Everything else is just a report that further articulates the transactions and the details of those transactions. So we've looked at the final outcome. Let's just have a quick look at what is needed on a, as I said, a regular period of time to perform this reconciliation. I mentioned earlier, first and foremost, you need the date of reconciliation. So as of this particular date is when you're basically going to compare both your bank and your bookkeeping system. So very, very important because it all that depends on that particular date because all transactions on and prior to that date that have not been reconciled is what you're pulling up, right? So if you're doing a reconciliation, so let's say for the month of January, and let's say you're up to date till 2019, so you've completed your reconciliation, you've closed your books for the year, and if you're doing it for January 2020, all the transactions that have happened both in trust and in general as of the 28th of January, for example, should result for you to compare. And when you do it for February 28th, the transactions for January 29th, January 30th, and 31st, if applicable, will also show up in that account. Okay? And that's the idea. So date is very important, and that's your starting point. The next, of course, is comparing and documenting the balance as per the bank. So this is where you open up your printed bank statement or go online, and as of this particular date, you choose that same date within the bank's drop-down, and then you get the balance in the bank as of that date, and you enter it there. Because that, again, that's the starting point that you're comparing your internal ledgers with. And then the last step that you see here, those line items, each and every one of them, the blues and whites, those are all the transactions that you have recorded in your bookkeeping system. In this case, this is the interface for uLaw, so those are all the transactions that this law firm has captured within uLaw, with the date that has been entered into the system, comparing it with the date that it actually reflected in the bank. Okay? And of course, you can change that. Sometimes you may deposit the check the same day that you received it, but it may not reflect in the bank, it may only reflect rather a couple of days later. And hence it's important that you capture the bank date for that particular transaction as per what the bank states. Okay? That's it. Those are the three important steps that you would do to generate the appropriate reconciliation documents that you need on a monthly basis. Now, how would this process help me? Of course, it's a law society document, so you're really helping yourself to be compliant and very much in line with what's expected out of the law society's responsibility and guidelines from a legal professional. But beyond that too, we want to drive home the point that this is a very, very valuable step for you to do, even for your own business. See, many times this reconciliation process eats up a lot of legal professionals' brains because it's a thing that they've postponed, they've procrastinated, they left it to the last minute, they're concerned about it, especially if there are many transactions that occur within a month. Then the more you delay, of course, the more you're going to get tensed about it till the day you get to doing it. And if there are a lot of transactions that have been left unreconciled, then of course there's a lot of midnight oil being burnt on the day that you actually do it, because there's a lot of catch-up to do. Rather, if you can kill that fear factor and actually find a way, the tools and the process to actually do it even on a daily basis, if you will. You don't have to generate a report, but you can quickly do a preview of it on a daily basis at the end of the day, because you know what's happened that particular day. If nothing has happened, that's fine. But I mean, if you know that transactions have occurred that day, even if not a daily basis, you can do that on a weekly basis for sure. And that's something that we recommend, because that gives you the peace of mind and the calmness towards the approach towards the reconciliation process. Okay? Also, most importantly, time and money saved. Now, if you haven't reconciled for, let's say, 3 months together, and let's say there are about 50 transactions a month that you have to deal with, then that's close to 150 transactions of time and money's worth that you have to now manage. And if you're outsourcing this to someone else, then that's the time and money that they would charge you to help you manage it. So if you're reconciling and previewing it on a more regular basis, you're also saving yourself time and money. And it's not that scary. It's the transactions that you know of that you're recording, and you're just comparing it with the bank. The three anomalies that I most often hear from our clients are the bank errors. So the more often you review the bank and your book, the faster you can capture those errors if they happen. That's a general thumb of rule. Of course, if it happens exactly on the day that you reconcile, then that's tough luck, right? Then you have no worries. You just put that as a bank error and you say, that's the reason why there's $20 less. The second and the third are around the outstanding deposit and outstanding withdrawals. So either you haven't deposited a check that your client gave you, or someone has not withdrawn the money from your bank account for whom you've given a check. That's it. Okay? The reconciliation is designed to catch two important issues. One, all the transactions that you have in your own bookkeeping system that do not match with your bank records. We spoke about this. So you may suddenly see, it may be just a manual data entry issue. Sometimes you may have captured a certain number. Sometimes there could be manual errors, human error with the amount of money. There could be a human error with the date. There could be a human error with regards to not even entering it or entering it into a totally different client's information. So reconciling gives you that opportunity to correct yourself, okay, by comparing these two statements. So either it's in the bank and it's not in your bookkeeping system, or it's in the bookkeeping system and not in the bank. Okay? And if you have done this process on a regular basis, and at the end of the month you generate that reconciliation report, what are the benefits, fringes of the benefits that they provide? First and foremost, you have a very up-to-date accounting system. Very important to have an up-to-date accounting system simply because it gives you the true nature of your profit and loss. You're not saying, oh, maybe, you know what, I may have got $1,000 revenue this month. You're not saying that. By reconciling, you're confirming to yourself and your firm that yes, having done all the balances, $1,000 is the revenue that I generated. And by doing the general reconciliation, you're also doing the expenses, right? And hence you know that $200 was the actual expense that month. And hence you can be very confident that $800 is the profit that the firm has had for that month. Now you're audit ready because what the auditors are looking for first and foremost is sanity and some level of discipline in data capture, cleanliness of how books are maintained, accuracy of the reconciliation data elements, and most importantly, the ability for you to provide all of this on an immediate need basis. Because if you're saying, oh, I can give that to you in the next couple of weeks, then, there's of course some thought process around why should it take you that long. And of course, with an audit, you are being notified ahead of time as to when you're going to be audited too. So that helps. But reconciling it on a monthly basis allows you to be audit ready. And as I mentioned, all you're doing is if you're reconciling and generating those reconciliation reports, you can even generate the ledgers and journals at the time of audit. I'm just saying, because you can be certain of the sanity of those numbers on a monthly basis, provided you have reconciled. You're ready to file your taxes with CRA. And I talk about this often in my webinars and in my in-person seminars too. The legal business is tough because you are multitasking and there's many components that you have to manage and deal with. There's of course the law society's compliance, everything that you have to do to keep that body happy. And then of course you have your clients to keep them happy and always excited and ensuring that you're doing your job. Then there's your role of actually being a practitioner who does her or his job to be successful at what you do at your craft. And then there's also the job of a business owner, right, a legal business owner who actually runs numbers and needs to provide both provincial taxes and revenue, profit, loss, because you're paying taxes based on the profit that you're showing on that in that particular year back to the Canada Revenue Agency, right? So if you can help yourself to start with reconciling, you've certain, as I told you, that's $800 profit. Perfect. That's the profit for that month. So cumulative, it's $9,600, and you're paying whatever percentage to CRA on that $9,600 as an example. Okay? And once you've done the reconciliation, as I mentioned, reporting becomes that much more easier because the accuracy of those data elements are high and it has maximum impact to your business. And the intangible benefit is the peace of mind, right? The priceless. I did mention this earlier in my presentation, but are you audit ready if the reconciliation is completed on a regular basis? We believe absolutely yes. Because as I mentioned, for those exact reasons, having those reconciliations done means that you've actually completed balancing your monies, both for trust and general, and all of your other audit documents and requirements just become a simple click of a report, such as your client's trust, client's general ledgers, your journals for trust, general, and disbursement even for your general. So if you reconciled your general account, you've also accounted for, really, all of those disbursements that you've paid in that particular month and may have recovered through invoices, right? Because a general let's look at a general bank account of ins and outs, right? So in a general account, you're going to have monies coming in where it's either money that you're paying yourself, moving money from trust to general, which means money is coming in as a deposit into your account, or if no trust was involved and clients are just paying you for the services after you've invoiced them, then of course money is coming in from there. Then where money is going out is when you're paying for office expenses. You just purchased a laptop and that's money leaving your general account. You just paid for a client's disbursement. Of course, it's very important if you're paying for disbursements out of your general account for clients that you have a way to track by client and by file. Very important. So legal accounting systems really help you with that. They've got your back because it's all built in to capture that entire audit trail of who that disbursement was dispersed for. So again, money is leaving that general account for those disbursements, right? So if you've spent 100, you've just invoiced 100, you know that's money recovered. And hence, generating that general disbursement journal has just made it really easy because you've already done the heavy lifting with the reconciliation. Okay. Now this is, of course, with a bit of disclaimer, this is not to specifically sell you on the uLaw product, but this is to specifically sell you on the concept of using a software system wherever the system works best for you and your business, with enough comparisons done, asking around done, but really a sales pitch, if you will, to motivate you to utilizing a software that can help you automate, reduce the amount of time and effort that you put in to do this task. We often continue to come across law firms, solo practitioners, whether maybe they're just getting started or otherwise, sometimes using paper. Of course, it helps when you have limited files, but even still, the ability for you to multitask and how to deal with multiple different components of your business, we highly encourage that you consider the benefits of using an automated system, especially because the legal business is beyond practice management. It's beyond a CRM. It's not as beautiful and as clean, and it's not a Disney movie where it's just about the CRM. It's a little bit more convoluted. It has a shade of gray because now you have numbers, you have money coming into trust, and the expectation of the law society is a very important responsibility because that's what's keeping you in business, makes you look good in front of auditors, makes you look in front of the public, and hence, because the numbers are involved, an accounting software really helps you automate the capture of those data elements in a timely manner, and also reporting and reconciling those numbers in a more ease of use manner, right? And legal accounting, of course, goes one step further to help you with those double entries, especially when I talk to you about that disbursement. As simple as that, the legal accounting system certainly has come a long way today, in today's day and age, to help legal professionals with that, okay? So quick summary of what's expected. Please to reconcile on a regular basis, generate those reconciliation documents, reports rather, on a monthly basis, followed with all the other compliance documents that are required, like ledgers and journals. But for that to happen, to begin with, find a way to have a discipline around how we record these transactions and these data elements as and when they happen. Write it down and then enter it into your system, enter it into the mobile phones of the apps that are provided based on the systems you have online access to your system whenever you go. So whatever is convenient, and in today's modern age where there's a lot of money and effort and tech being invested into the legal business, do take advantage of that. Of course, very important that you also maintain financial record and record keeping, especially bank records. It doesn't help, rather it doesn't hurt to have an online bank account so that you can have all of this in the cloud. Banks are, they call it bank-grade security, so you do have that security component. Or if you're the types of folks or law firms that print these bank statements, of course, have all of the right security aspects taken care, that you have a good way of managing all of these documents, because you're going to need them to compare on a monthly basis, okay? And of course, it's all about the compliance and accountability and how you, in today's day and age, can make it easy on you given all the multitasking that you're required to do. The amount of marketing, the amount of selling, the pressure of having to close the file, be successful at it, all that adds up. So this is one less thing on your plate. If you can actually find the right tool, the right discipline to use that tool, because that's important too. Picking a tool is important, but what's important is to learning it and making it work for you or others in your firm using it properly so that you're maximizing the value of that particular product or tool. Okay? Alrighty, so for those who don't know who we are, uLawPractice, we are a very proud Canadian legal accounting and practice management software company based out of Ottawa, and we serve legal professionals across Canada, and this is what we've been doing for the past 10 years. If you want to learn more about us, please do visit our website at uLawPractice.com. If you are existing clients joining us, please do ask about our brand new bookkeeping service that we offer at a nominal charge that makes life even more easier for our busy clients. I'm now going to move away from my presentation slide and quickly jump into my uLaw account. So I'm logged in as my fictitious legal professional, Roger Moore. I've used Roger, of course you've heard of the name, one of the ex-Bonds, one of my favorite characters. So let's assume Roger Moore is this lawyer. And let's take a quick look at the financial elements of capturing these data elements, right? We mentioned about having a discipline to capture data as and when it happens. So let's take a quick workflow, if you will, of those captures. First and foremost, in a law firm, you have a client either calling in, putting information on the website, you calling them back to talk more about a particular file or specific matter. Okay? One of the first things that you do in a law firm is to create a client. So in uLaw, you would do a add to my new clients, and I'm going to say Lauren Patrick. Okay. And let's say Lauren got to know me through a family member, referred by Uncle Bob. Okay. Again, you're capturing quick pieces of information that becomes very important when you're doing, let's say, a conflict search. So every data capture in uLaw is an important element for some purpose or the other. Okay, so you've done a quick client intake. I'm going to skip through the parts of the conflict search and everything else. I want to keep it more in line with the context of today's webinar. So let's say I move ahead and create a matter for Lauren. Okay, so I'm going to skip the whole conflict search, but I'll show you quickly as to where you can go about doing that. Very important step, and actually a law society compliance, that you actually do what is called as a conflict search and actually generate a report. So right here you do a conflict check, generate a report, and also provide a conflict search report to the law society as to why you believe Lauren was not a conflict. So I'm going to go ahead and create a file or a matter in legal lingo. And let's say this is a wills and estate matter. And you can actually mark this as a category of areas of practice that you do business in, so that it's easy for you to then capture important data components like where are you making most money, things of that nature. Alrighty. Of course, it's a very lame title, Writing Will. And I've just created the file. Of course, give it a couple of extra seconds for it to reflect on Join Me. It's already come on my screen, but it's probably taking a little bit more time for you, for it to be reflected on your screen, rather. Now let's capture the first data element that makes sense. So let's assume there's a retainer that's coming in. Okay, so right away you can say, of course, because we made it simple in terms of English, in terms of whether that's money coming in or going out, it's either a deposit in trust or a withdrawal from trust. So I'm going to go ahead and say it's a new retainer, which is money coming in or a deposit. And I'm going to go ahead and say it's $1,000 to that same example that we took when we were talking during slide shares. And we'll say we got it as a check, and that's my check number. And in my bookkeeping system now, at this very moment, where I have not yet deposited into the bank, I'm just saying that's where I will put the money in. And I'm actually going to give the client a receipt. Because, you know, with that, Lauren's going to be happy. And of course, I missed out a point. After the conflict check, once you've created the file, you would, of course, sign up a retainer letter. There's quite a few examples of those in uLaw as well that you should expect. But I'm assuming you've signed the retainer and you agreed on that $1,000 retainer. Okay? Alrighty then. So that's one data element captured. So let's say, where did that money go in terms of reconciliation? So if I go into my accounting, and let's say I do my reconciliation right at the top. One of the most important things is available as a hot button, and trust reconciliation. And if I close it up here, right away you notice that $1,000 has reflected as a transaction that has been recorded in uLaw with the date, with a placeholder for a bank date. Now, if you deposit this today and you check the bank account and it has reflected on the 7th, then you leave it as that. But if it actually has reflected on the 8th, then you would change the date on the 8th. Okay? So this is where it has reflected right away from a reconciliation process. Okay? If you look at the actual trust transaction itself, money coming into the trust should mean that you're able to provide a trust statement for the specific client. And that would be the trust ledger that states that $1,000 actually came in from Lauren. Okay? Now let's move ahead and bring another data element into the picture. This is where you're actually docketing, and you're going to generate an invoice, and now you're going to transfer the eligible trust amount from your trust to your general account. So let's say I go ahead and say initial client meeting. I'm going to say initial meeting, retainer agreement signed. Do a quick spell check. And all right. Let me just make this a little bit more prettier. Okay. And I'm going to say I actually spent a total of 1 hour doing this. And you know what? I'm actually going to charge the client 1 hour as well at the rate of $450 per hour. And of course, there's taxes in addition to that. So now once I have docketed this, that information is going to be available to me to generate my invoice. So let me quickly, again, I want you to appreciate that these are day-to-day transactions. I'm sure these are no strangers to you as transactions that you do in your law firm. And my idea is to just show you how those data elements are captured for you to reconcile as often as you like. So now if I go ahead and let's say invoice, I'm going to skip the pre-bill, though a very, very important recommendation is to generate that pre-bill before you send it to the client if there are any mistakes or errors or changes that have to be done, right? But for the purpose of time and today's presentation, I'll go ahead and generate that invoice. Now, of course, that invoice is your license to move that eligible amount of money, which is exactly the $408.50. That's what you've earned by putting in the effort through this docket. And the invoice is a means to reflect that to your client. Right? You put that effort. How would the client know about it? It's through this invoice. Right away, here's the invoice to Warren Patrick, which clearly states you spent an hour, and this is all the work that you've done in that hour, and you're going to charge $450 plus the taxes. And you have a quick audit trail of the retainer of $1,000 that we also saw in the reconciliation. And that is the balance in trust, $491.50. Okay? Now let's go ahead and do the last step, if you will, to make that money yours. So by clicking the question mark, I know right away that that's the amount of money that's left in trust. Not more, not less, but exactly $508.50, again keeping that data element compliant. And now you're saying that you moved it from your trust account into your general account, and let's say you in the province of Ontario did an EFT, online banking, then of course you know that there's a Form 9A that you need to fill out, which we will. So uLaw kind of really provides all of that workflow right there as and when you're doing it. And that's the idea. As and when you go through the day-to-day aspects of your legal office. The compliance and the accounting components happen behind the scene in a very subliminal way, setting up you for success at the day of reconciliation. Okay? Now let's go back to the reconciliation for trust. Now you see there are 4 transactions. Prior there were 3. And what's the 4th? Now leave this. There's, this is the client Abhishek Tanwar. We've got that. Those two first transactions were on the 5th of February. But these are the two transactions. You can actually send them, descend them as well. So here's the $1,000 that we got from Lauren. But just now, we transferred 508.50 worth of money from the trust account into the general account. So that means it was withdrawn from the trust account, and that's why it's under withdrawals. We don't want to get into debits and credits. That's for the banks. But for you, layman terms, let's just keep it simple. It's money coming in, deposits, money leaving your bank account, withdrawals. So 508.50 was withdrawn from the trust account, and that's what's shown in the reconciliation. Now let's say that's all the transactions that occurred today. Okay. Now you certainly understand these 4 transactions have occurred this week. Okay, let's say I'm reconciling this week. What uLaw provides you, I think, as a special feature, though, is instead of having to wait till the end of the month, you could say, open up the bank account right now, make sure that this transaction exists, and maybe the bank statement was not the 5th, it reflected only on the 6th. You can change that. And maybe, again, this was not on the 6th, it was the 7th. You can change that. But these 4 transactions existed in both your bank and in your legal accounting system or your bookkeeping system. In this case, it's uLaw. And all you're doing now is, how do I put this? You're basically telling yourself at the end of this week that these 4 transactions existed, and all you have to do is put in the bank balance. Of course, this is a playground account, and hence I don't want you to get misled by the numbers. Now, if I were to click reconciliation, that of course generates a reconciliation report. Rather, let's do a preview. That way you have cemented in your mind that these 4 transactions truly did exist in both systems. And by doing a preview, you have also verified that these transactions have occurred when your memory is fresh. So accumulate those memories on a weekly basis, and then automatically at the end of the month, they're already existing in uLaw for you to reconcile. If I were to go back and do, let's say, a reconciliation, now you notice that these transactions are no more in black. They're in blue, indicating that you have already dealt with them. So at the end of the month, you basically are just checking all of them blindfolded because you have already done the checking of these numbers ahead of time. Okay? And of course, the preview is as good as the actual reconciliation document. So let me go ahead and generate that. So for example, if I were to just do one more event, and I'm basically saying it's a flat rate, charging you $200 for it, and do the same process. And let's say this happened the next week, then you would recognize that that transaction would now be in a different color, which means that you have not yet dealt with that. You have still not compared that transaction with the bank. That's all there is. So generating these reconciliation statements in a very accumulated manner, just in time, allows you to accomplish the reconciliation document at the end of the month. Now let's do the general. For those exact 2 transactions that occurred, if I were to do a general reconciliation, you notice here. So we've already dealt with the 508.50, and that's why that's blue automatically. because you know you confirmed that money came out of the trust account into my general account by doing the trust reconciliation preview. And now all you have to deal with is open up the bank account, end of this particular week, and really capture. And you can see there's actually a transaction from January that has still not been reconciled. So you basically will open up the January bank account for your bank, ensure that this actually reflected on the 14th, or if there's another date, making sure that these transfers actually occur in your bank. And of course, blindfolded, put the balance, and you can generate a preview. Okay? And you do the same reconciliation process. I think there's a quick question which I'll get to. Yeah, I mean, of course, you can always go back in time to do your reconciliation, of course, because when you put the date in, so let me go back to that same example. I think the question is, can I go back in time? So when I put today's date, it's basically captured all the transactions prior. So let's say there's a retainer on the 31st of January that we've not captured, or a payment that came through that we did not capture. Of course, you can go back, or else you've reconciled it completely, but then you missed it. You have to go back. You can do that too. You can regenerate that reconciliation statement if you have to. Okay? So once you've, so let me go ahead and actually reconcile this just to show you what that report looks like. Now that this is all blue, let me go ahead and clear them all. So let's say I'm going ahead with the reconciliation process itself. So this was the preview of the trust reconciliation document that we've done for the week, which captures the same pieces of information as expected by the Law Society, the closing balance per bank statement, were there any outstanding withdrawals or receipts, there was none, and here's the client trust listing. Right from Toby McGuire, and we also give it to you in color-coded to tell you that these are really old accounts with an outstanding trust balance, and hence you have to call Mr. Bill Thornton and talk to him about what needs to be done with this $2,000 that they're still in your trust account on his behalf. And last but not the least, you have our dear client Lauren Patrick, and you clearly know that that's the balance of $491.50, because if you remember, we had done the trust transfer for the $508.50. So the preview allows you to do these previews on a weekly basis, daily basis, whatever it may be. Gives you the color coding so that when you come to the end of the month, all you're seeing are blue colored transactions. Okay? And then you're checking them all, and then you're just basically generating this report. This becomes the official transaction for that entire month. So a good thumb rule would be maybe do 4 previews in a month, or 3 previews, and then the 4th last week would be an actual reconciliation. Okay? So once you've actually done that, we talked about the compliance documents. So creating a trust ledger for the month of February is a breeze, because you know you've actually mapped those numbers out. So let's say I want to go monthly. I'll choose the month of Feb. And here's your trust ledger that has two clients, Mr. Abhishek Tanwar and Lauren Patrick, where you see there's a $1,000 retainer receipt and there was a 50850 trust transfer leaving with the balance. Okay? The same thing applies for the general account as well. And of course, with the general account, another data element would be that of entering office-related expenses as well. So that's another reality of a transaction that would occur in a law firm's business with regards to general reconciliation. So for example, if I had an office expense, I'm just going to add that real quick today, laptop purchase. And let's say you know what, that's okay. I'm just going to go ahead and say office supplies. I'll say I paid $800 total. I paid this to Amazon. Coming out of my general account. And maybe it was a e-check. So this was now $707.96, total of $800 that's left your general account, right? So when you actually do your general reconciliation, you would now see that as a withdrawal from your general account. So there you go. Before you only had the 4 deposits, that was just revenue coming through. Now when you do your general reconciliation for this week, you see that this line item of $800 that has been withdrawn because of this laptop purchase, right? So if I were to do my general reconciliation preview for end of this week, these are the 5 transactions that I should see. Okay? And you would do a similar preview, and then at the end of the 3rd week, when it comes to the 4th week, you're actually going to do maybe 15, 20 blue lines, followed by 3 or 4 black lines for the last week. And then it's just a click of a button. So with that, I hope it kind of really gives you a context of how the day-to-day nature of a law firm's bookkeeping, the money's coming in and out, those are the actual important components of this reconciliation report and what it entails to do this reconciliation, why it's necessary, and it's also an important tool for you to be on top of your business. Okay? So I will open up the floors for any questions that you may have with regards to today's webinar. Of course, this is being recorded and will be available on our YouTube channel, uLawPractice, and we welcome you to subscribe to our channel because anytime new videos are uploaded, both informational and CPD based, you would automatically get them in your playlist. And again, I'll open the floors now for any questions, and thank you everyone for joining me today. Again, we hope this was an informational session. One of the things we're certainly asking for all those active participants who are joining us on these webinars to kindly recommend other subject areas where we can talk to the law societies and get CPDs on, content that's important to you so that you're set up for success as a professional, and that's a big part of our goal as a company too. So please do write to us. You can write to us at support@uLawPractice.com. So today's webinar is accredited for 1 hour of professionalism CPD credits for the province of Ontario. So you just sign into your LSO web portal, and the title today's presentation is Trust and General Accounting Demystified. Trust and General Reconciliation Demystified. So that's the title of the webinar. Okay? All right. Well, thank you so much for your time. Have a fantastic weekend. I will look forward to seeing you in our webinar next week. Take care.